And we are live here, 3/29/2019. We've got Tim, we've got Matt, we've got Coach Cody, and we're back here, ladies and gentlemen.
I tried to fight them off as long as I could. We tried to keep you guys at bay, and it just did not work. We
I hear
failed.
you guys had some fun there, Cody.
We did. I mean,
Yeah.
Frank's lost. Like I don't even know where he is now. Like y'all beat him down. I'm kidding.
Well, it's good to be back, and I'm glad you guys could pop in and sub in and make sure. I actually heard a lot of good comments, Cody. So great job holding the fort down while we were traveling and doing some business. Mark on the podcast, Matt, he said either they're watching Game of Thrones from season 1 to season 8 to get ready for the release, or they're on a business
I
trip.
heard it. I heard it. There could have been a little bit of both, actually. To be fair, I mean, we do have Game of Thrones coming up here in a couple weeks, right? And so yeah, no, we had great time in the last week. Both Tim and I were speaking for Legacy last weekend, and then we headed down to Florida for our annual Legacy trainings, and it was just Tim. It was an amazing experience. I mean, truly an amazing experience to be surrounded with such great entrepreneurs and business like-minded people, and it was really, really, really fun. And you and I had to give a little 45-minute presentation in front of just a bunch of cutthroat market assassins in real estate and stock and business. And Tim, I can't remember the last time I was nervous giving a speech, but for the first 5 minutes I was talking, I was a little nervous. I was a little nervous speaking in front of such a amazing group of people, but it was fun. It's fun, but it's great to be back. And guys, we missed you guys. I mean, I don't, man, Tim, we've been doing the halftime report for 8 months now. I mean,
Yeah.
so like 6, 7, 8 months now, and it was just we've missed it. We've missed hashtag Team Tackle. We missed our halftime crew, and it's good to be back with everybody.
100% good to be back with everybody. Let's start with the S&P 500 here. Higher high, higher low. You've got a little bit of slowing momentum though, Matt. If you look at the pivot points, the market is off to the best quarter start since 2009. So percentage wise, fantastic. 12, 13% by the end of the day, depending on where we end up here today.
Does that count the
pivot,
giant drop?
It does. Well, no, from the first of the year
Well,
to
it's
now.
the first of the year. So, I mean, yeah, a 12% snapback rally after a 20% clip isn't exactly, things to celebrate here, but the market has responded very, very well in the first quarter, especially on the backs of some negative slowing growth news. You got to like that. A lot of it was based on, positive news coming out of the Chinese trade deal. And, Treasury Secretary Mnuchin today literally talked about how they had more constructive talks when it comes to the international trade agreements, and I believe they've been having constructive talks for, oh Lord, what, 3 months, 4 months now. We've heard this every single day, and it's getting to the point where it's kind of laughable when they even talk about it. Don't come out unless you get a deal. Just shut up until you get a deal. Market doesn't care. From a technical perspective, Tim, you are slowing down just a little bit. As you can see, you have a little bit of upward, downward, upward, downward. But what I'm looking at here is really kind of this base here. From this base to this pivot here, you really kind of moved about 150 points in that price movement without any degree of consolidation, high base, or retracement. We got a good retracement that everybody in hashtag Team Tackle nailed off this hammer candle with the upward movement in price. Now you're looking at a little bit of a 100-point movement back up. So 150-point movement followed by a 100-point movement. That is by definition slowing momentum in the market, but that's not a bearish indicator though. Slowing momentum does not mean short the world. It means you want to be a little bit more cautious with your trade selection, with your position sizing. And what I'm looking at here and what I like here, and you guys have heard me talk about this when the market plays defense, and the market right here is absolutely playing defense right on that rising 20-day moving average. It's currently hitting support right there at 2,800. If you break this down into a 30-minute chart, you can kind of see that 2,800, 2,790 level really kind of show that intraday support zone. And now you're talking about perhaps a breakout of the intraday levels right there at about 2,830. If you can hold that level at 2,830 today, I'd call that confirmation on a little bit of a pivot right here above the 2820, 2830 levels. So it's slowing down, but I still like this from a bullish perspective right now.
Yeah. And by the way, before we go too far down the rabbit hole here with our show, I do want to remind you that we have our Women in Trading Mastermind group tonight. And I did drop the link in the chat. Ladies, if you want to come and attend that event, make sure that you do. Great job on the interview with Emily on the podcast, by the way, man. I really enjoyed that.
She's Emily is such a joy to even talk to, be around, and just an amazing person. And she's going to be live with hashtag Team Tackle and the Women in Trading group tonight for our second Women in Trading live webinar. And we're inviting everybody out there, not just the ladies. If men want to show up incognito, you can do that. According to Emily, that's okay. But no, Women in Trading, I think it's such an amazing mindset that Emily and Rosemary came up with. And we had a good first Mind of a Trader for the Women in Trading group last month. We're going to have another one just here today. And we're going to do this once a month for the Women in Trading group as they kind of help out other women that are interested in trading within our community, get more active out there from a trading perspective. And we all know here, Tim, here's the simple reality. Women are better traders than men. From a percentage probability perspective, women just do it a little bit better than men. And we don't need to get into the whys and the hows, but they do from a percentage perspective. So what Emily and Rosemary is trying to do, I just think is so amazing. As you can see, there's our girl right there, Emily. You can save your spot. All you got to do is type in your first name, last name, email, and you get to save your spot. And that's just so that we can send you an email so that you can have the link so that you can attend. And that is tonight, as you can see, 7 hours, 20 minutes from now. You can watch a video on it, sign up. But definitely let's throw our support behind what Emily and what Rosemary are trying to do, and let's support them tonight.
Yeah, 100%. And I'm excited for it. You know, I really enjoyed watching the recording from the first one. Now that I can go incognito, I'm going to be there live. I'll just kind of sit in the chat, maybe not say anything. I don't know.
And very quickly, I just want to say one thing. Tim has a new saying. It's 100%. It's not c'est la vie anymore. It's not. It's 100%.
100%.
And in the last 3 days, Cody, I have seen Tim say 100% in a positive connotation, in a negative connotation, in a sarcastic connotation, and in a humorous one. So you really don't know where he's coming at it with. Same thing with C'est La Vie. It's 100%. So let's support women in trading 100%.
100%. I like it.
That's right.
All right. Top 5 gainers on the S&P 500 here today, Matt. CarMax, KMX, number 1. In fact, they're up about 7%, actually 9.5% at this point. They're pushing the 70 mark. Look at KMX, and they had earnings, you know, and they beat their earnings. They beat the number quarter over quarter and year over year.
Well, and they're also a Tackle 25 stock.
Yeah.
CarMax is good on the good positive response on their earnings. Obviously, when you're going into earnings with the cover call, you're typically collaring the trade. And based on what you're seeing in the price movement following the earnings report, Tim, and I have not had a chance to look at their actual earnings numbers yet. I'm just kind of getting back into my routine here for the first time. But you got to love the price movement coming out of the gap. You got to love the fact that it gapped up to about 66.85, showed a little bit of weakness from an intraday perspective, but then just strength. You are running into a little bit of resistance zone. So if you're looking at this from a directional perspective, I'd probably wait a little bit to see how the market responds here at this 70 by 71 level. As you can see, 70 is just a significant whole number, but 71 is this old resistance zone. So it's really kind of where he ran. You might want to wait for a better setup if you're not into anything. But if I was collaring this trade coming into the earnings, it's time to take the collar off and let it run a little bit.
Yeah. Chip makers are also moving here. Micron is number 1 out of all of them. Applied Materials as well, looking very, very good. MU or AMAT, either one of them. You know, Micron moving about 4% here on a nice little pivot point, Matt. Post earnings backfill. I kind of like that right there.
Yeah, I do too. And I can understand somebody trying to pick it up with the cheap risk with the stop loss underneath 40. But you got to realize this is not a bullish uptrend right now. This is a sideways neutral trend. Well, I don't want to say it's sideways neutral. It does have a little bit of an increasing support level. So maybe more like an ascending cup and handle type formation that is happening. I would never pick up this stock right here with overhead resistance double topping at 43.75 by 44. You really got to wait for that breakout when you're talking about an ascending triangle or a cup and handle situation. And that's really what I see this on CarMax. On Micron. I do like it, but I don't like it from a directional trading perspective. Applied Materials, Tim, I'm a little bit more convinced from a directional perspective on Applied Materials, just simply because you did get slightly up above that, but really kind of a similar pattern here. I wouldn't do anything directionally on either one of these. Both of them are great cash flow type stocks, though, both from covered calls, naked puts. They're both in that $40 price range that we love for covered calls and naked puts. Both of them would be appropriate right now for those for cash flow systems, bullish cash flow systems, neutral cash flow systems.
I think we got to start with a company that we've been both very critical of over the years on the downside. Some of the negative performers here. Number one is PVH, but that's just backfilling after a gap up. The one I want to talk about actually is Wells Fargo, Matt, WFC. Their CEO came out and finally said, hey, I'm going to resign. I'm moving on. Can't get past this data scandal and all the things they did with those accounts and the fake accounts. They tried to build back public trust, but it never really did work. Then stock is down on that news as well, so kind of a random news day when the CEO resigns and you are also selling. The market doesn't know what to think about this company. What's your take on a situation like that?
The market also always tells you what they think of the CEO with the response to after a CEO leaving, though. And I can give you numerous examples of that, but say what you will about the Wells Fargo CEO, Tim. The market is responding negatively on the news. You're looking at a bearish engulfing technical candlestick formation right now with support, very important support on Wells Fargo at that $48 mark. But it's not just Wells Fargo that I'm concerned about in the banking sector, Tim. Mm-hmm. The banking sector, to me, it is one of the, if not the worst performing sectors from a technical perspective. You're looking at perhaps a little bit of an M formation here with the double top, double bottom at 27 by 27 resistance by really kind of 28, 25.80, 26 support. You broke that level, established a lower low, as you can see right here, right around the 25.20 mark, and then you're retracing back up into that breakout channel right there around 25.80 by 28 by 26. A little bit of a pierce dark cloud cover type candlestick formation. I don't like this sector at all. I would not be. It would take a lot for you to convince me to buy a bank stock right now. It would take a lot because I just don't like what I am seeing in this sector across the board.
Yeah. Let's move on to the Dow and talk about the blue chips and the big cap stocks here. There's some interesting patterns in the Dow. Caterpillar and Boeing both stand out. I want to start with the overall index and its pattern, Matt. That's even more neutral than the S&P. You talk about slowing momentum. You now have pivot points that are consolidating sideways. What's your read on the technicals on the YM contract to start?
Straight up neutrality here, Tim. Straight up neutrality here. S&P, I would have a slightly bullish rating right now because of the slowing momentum somewhere. And we got our scouting report meeting later today where the bird dogs of tackle trading are going to come on and analyze all the sectors and all the indexes and, get ready for our scouting reports that come out on Saturday. However, when you're looking at this Dow is not bullish in my opinion. This Dow is in that probably more the 45-yard marker in my opinion, where you're right of center, right? You're right of center. You have a bullish bias, but you don't have a bullish trend to a certain extent. And that's where you're in that 40 to 50-yard marker on that right side of 50. And so I'm not looking to be aggressive in the Dow right now. It's got to show me some strength here. You got a little bit of a double top and then now a double bottom situation. You got overhead resistance right here at about 26,150 is where I put it. You have support anywhere from 25,500 all the way down to the tick down here at about 25,250. So you got a pretty wide range of support between 25,250 and 25,50 with resistance overhead right about 26,150 by 26,200. Let's change that to 26,200 with the tick over here. So you got a really tight range of neutrality, Tim, just a little 502% type range of neutrality. I would not touch the Dow aggressively one way or the other until we see those levels get broken out.
Couple of stocks that are grabbing my attention on the bullish side. Number one is Caterpillar. And whenever you see headlines that the U.S.-China trade deal and their talks are progressing in a positive way, industrial international companies like CAT can benefit, Matt. It's a complex pattern, might just be a neutral pattern, but it is up 2.5% here today. What's your read on CAT?
Read on CAT here, nice little price movement. I got a little bit of I had a neutral rating as it was down here, but if you can clear and close above 135.70, if you can close above that level, I think you're back to being slightly bullish on Caterpillar with perhaps some directional plays on Caterpillar.
Yeah. Boeing is moving again. It's one of the higher volume stocks. It's been high volume since it's been in the news here recently. At some point, you're going to have to start talking about potentially Boeing as a buy or a tradable candidate. I'm not there yet personally. I still haven't seen the fallout from orders or what other companies are going to do. And they're still investigating a lot of this stuff, Matt. Volume is high. It's underneath the moving averages. For me, it's a stay away. What's your take?
It's got to be a stay away right now. There's still a lot of unanswered questions with Boeing. The MCAS system, it's come out that it was partly responsible. Maybe there were some pilot training mistakes as well, but with that Ethiopian jet, it was partly responsible. It's the same thing with the Lion jet that came out of Indonesia about 7 months ago now. So it's going to be interesting to see what Boeing does, and in comparison to all these orders of these thousands of Supermax planes that are now have not been delivered. Are we going to see those orders change? And I don't think we will. I don't think we will, but I want to see that first. I want to see this volatility clear out a little bit more. Boeing is still a fundamentally strong stock, and it's so sad that we saw that human condition play out, and it certainly could have been avoidable. Is Boeing going to be some type of legal responsibility there? I want to see that play out as well. So to me, it's a stay away, and it might be a stay away for a while for me, Tim. I love this stock, but I'm not going to take the risk of trading this stock on the hope or the thought process that it's going to be positive or negative. I think we got to see data come out here, and as an analytical individual, I got to see that data. So from a technical perspective, you have short-term consolidation after the news kind of came out originally about 3 weeks ago now. From an intraday perspective, if you look at this from a 4-hour chart, you're really kind of seeing that consolidation play out between 360 and the overhead here at about 385. If you can get back up above 385, you can make a bullish case here. You absolutely could make that bullish case. And if you look at it from a weekly perspective, Tim, it even looks even better from a weekly perspective. So from that, if you're looking at this from a technical perspective and you remove the fundamental concerns, you remove the behavioral concerns, and you remove the concerns from a legal responsibility perspective, and you're simply looking at it from a technical perspective, and you believe in charting 1A, 1B, 1C, you got to like that pullback on the weekly chart. But to me, I still think there's too much unanswered questions on Boeing for me.
I like low-hanging fruit. I like easy pickings in a market and clear setups where I don't have that extra unknown risk. I mean, other traders go ahead and take them. I get it. But there's too many easy trades out there. That's just an opinion.
Okay,
but
so buy Boeing off the weekly retracement or short Mosaic off a standard technical pivot, or buy Apple off a short-term consolidation, short-term retracement where it's now pivoting at 185. I mean, if you give me my pick, there's going to be probably 50 trades that are cleaner, probable technical setups that don't have that overwhelming unanswered question that Boeing has right now.
Yeah, 100%. Give me two charts real quick, Matt, rapid fire style. Visa and American Express. You're talking two Dow components, where you have clear setups. If you ever had do I rather like a breakout or a pullback? I think you've got two major credit card companies that you could have that discussion with.
Let's
Visa
do this.
Breaking into an all-time high about from, within a dollar here, probably. I don't know where the trigger would be, 156.82 or so. But American Express on a pullback, Matt. Which one you like more?
Well, let's throw it out to everybody. Let's throw it out to the crew. Halftime crew. Do you take AXP off a standard bullish retracement with a trigger on confirmation above 110.40? Okay, that's option one. Stop loss to me would have to be under 108. Have to be under 108. So you're taking somewhere about a $3 to $3.5, $4 risk on that trade. First target 114. Secondary target would have to be 8. Yeah, it would have to be 8. So second target would have to be somewhere around the 116 to 118 level. First target 114, second target 116 to 118 level, just depending on how aggressive you wanted to get. So you got about a 1.5 to 1 reward to risk ratio there on first target. The other one we were looking at was vis-a-vis. Okay, Visa. Depending on your perspective, I would call this a high base. That's what I would personally call this.
Yep.
You have a trigger above 156.82, and that's a pretty clear trigger, Tim. You got 156.82 as a tick over here. You got it right there about 156.70 there, kind of hitting that same level here today. So you got to get it above 156.82, which most likely means you're getting it above 157, right? Stop loss would have to be underneath the 155 level, in my opinion. If you break this down to a 30-minute chart, that's kind of the low of today. Maybe even 153.50 if you wanted to be a little bit more conservative. I like that stop loss underneath that 153.50 level as well. So when you're looking at this, target on this type of high base type situation, 135 to 150, 15, 145 to 11, you're talking about a 12.5 target. Off this, you're talking about a 164, 165 target. So which one? Which one, halftime crew? Do you take Visa or do you take American Express off the pullback? You got to pick one. Got to pick one.
You can play both, obviously, but if you have to pick one, I like the idea of the buy high, sell higher. Breakout on Visa to me is clean and very clear, and also has had very good breakout performance in the last couple of months. The markets have been very, very strong. Both companies are good companies. And this is, I guess, the reason I bring these two up, Matt, is when you've got clear entry points on stocks that don't have the random news and the risk that Boeing does, you don't need to necessarily force the action just because you love a company. We all know how much I love Boeing.
Definitely give me a company breaking out of an all-time high over a company that had very, very volatile news, and we don't know all those unanswered questions. Tim, which one would you take after the breakout?
I like the Visa breakout. You got a few people saying AXP, and you got a bunch of people saying Visa. Cody?
I gotta say Visa. Like before the trade was even done being prepped, I'm already looking at Visa myself to prep the trade. I mean, you look at how go back to the Visa chart for me. When you look at, like Tim said, it's had breakouts in the past. It literally has a very distinct pattern. It'll break out, it'll come back a little bit. It'll break out, it'll come back a little bit. And now it broke out. It's coming back. It's like if the pattern continues and history repeats itself, this thing's got a lot of room to run, and I really do like it.
Maddie, which one would you take?
Well, we all know I love a good retracement.
I know.
We all know I love a good retracement because retracements typically have this kind of the breakdown. This for the breakdown for me. Retracements have less probability of success than breakouts do. Okay, can we all agree with that premise? Premise number one. Breakouts are higher probable setups than retracements are. One is you're buying into momentum. The other one you're buying into slowing momentum, right? Higher probable technical setup. I love a high base breakout too, though. I mean, I'm a big fan of high base breakouts out of all-time highs. I mean, those are momentum plays. Blindly, Coach Frank would have been like, yeah, Visa, we're doing Visa.
I know what Frank would choose.
Breakout Kings choosing Visa.
Yeah.
I wouldn't do them both. I wouldn't do them both because they could be prone to positive, negative news because they're in the same industry, right? If I had to choose, because of the momentum I'm seeing in a breakout on Visa, because it's got a very clean trigger, a very clean stop loss on Visa, I would probably buy into the strength on Visa versus buying into the bearish weakness on American Express. But it's closer to me. It's closer than you would think for me. It's like 52-48%. But I like them both. I do like them both.
Cody, let's get that poll on Twitter and maybe throw it out there to all
no
of our
way.
team.
Coach Frank said it.
Frank,
no
Frank,
way.
That's not true. No.
No way.
No.
He said that just to go against everything I just
he's trying
no way. He's trolling me right now. He's like, Matt took my place as the lead analyst on the halftime report, and I'm going to troll him right now. No way.
I think we both saw it at the same time. And we were like, no, stop.
No. Frank's gonna have 50 breakout candidates on the scouting report meeting that we're gonna have to break down. So no way.
That was one of the things we did teach on, or we started the No Justice show with was on Friday. I said, Frank, how do you find your breakouts? And we went through it all. So yeah, he's probably gonna have a bunch more.
Yeah. Did get a question on MasterCard. I don't mind MasterCard on a breakout, but I do prefer Visa's breakout more than MasterCard's breakout.
You know, over all of them, I might actually prefer some of these large cap tech stocks. Matt, Cisco is about to break into a new high as well. Very clean. I love the Google pullback. Let's move on to the NASDAQ here and talk tech stocks for a minute.
Tech, baby.
Out of all the indexes, it's ranked number one for me. That's a very clear pattern, beautiful uptrend, pullback, pivot, even a nice little green candle here to end the week, Matt. What's your read on tech stocks?
It's tech after what we've seen the last two and a half weeks on tech. Tech is number one for me too, Tim. It goes tech, S&P, Dow, Russell for me in that order. But I love what I'm seeing in tech right now. You got a little bit of a pullback coming down into a rising moving average. And if you break this down into the weekly chart, I know we don't have a lot of action on a weekly perspective. I mean, we're not even going to clear 1% on the weekly. But what I like about it is kind of the same thing I like about what the S&P 500 was doing. It's coming down, and even though we haven't seen that good confirmation on the pullback trigger, we are playing defense here. So if you break this down into a 30-minute chart, you see a little bit of neutrality throughout the week. But over the last couple of days, you got a pretty clean little bullish uptrend forming on the intraday perspective, coming into perhaps confirmation on the daily chart. So I like what I'm seeing over the last three days from an intraday perspective. If you're looking at confirmation for me has to start with the close above 7,400. Without a close above 7,400, that to me is not confirmation. But if you did get a close above that 7,400, and we're ticking currently at 7,388, I think that would be a positive indicator coming into the weekend. I'm not looking to make trades right now, guys. I'm not looking to go pile up on Google and Apple and Cisco right now, but I am getting ready to make trades come Monday morning, Tuesday morning on which of these tech stocks that if confirmation does occur, should have some really good run in them. Apple's one of them, Cisco's another one, but there's probably a good 75 different stocks out there that are setting up in high base type situations, bullish retracement situations. And here's what I promised to the crew here. We are going to bring the fire in these scouting reports this weekend, guys. The Berg Dogs of Tackle Trading. We're going to scan the entire market, and we're going to find the best technical setups, because I see this as a buying opportunity in the short term on the NASDAQ, on the S&P 500 as well. And when you're talking about retracements and triggering, those are cheap risk, and I do love cheap risk off retracements.
Yeah, I do say Google, though. I mean, we've got to take a peek at that pullback, man. I know it's going to be on the option report. There's no question about it. Coach,
you don't know that because I don't love it.
I do.
You can't preemptively veto something.
I'm telling you, I don't like it. I don't. I'm telling you, listen, anybody in that meeting has the right to veto, not just me and you.
That's true. 100%.
Okay? Anybody has the right to veto. And usually when picks get vetoed, people remember and they make fun of them down the road. I don't see this as a clean retracement the way you guys do, though. And I get it. I do. I see the slowing momentum. I see the rising moving averages. I see the trigger. I see what you're seeing. Okay, I do. But I also see a little bit of a flag pattern here, and then the market came back down and broke that 1180. And once you broke that 1180 support level, Tim, to me, that's not a clean retracement. Now, could I be convinced by the 10 other bird dogs of tackle trading that what I'm seeing is not legit and it's a great opportunity? I am willing to listen to the argument. But again, to me, you had to stay above that 1280. Google didn't do that. Google came back down underneath that level. In comparison, look at the NASDAQ in comparison. You're telling me we can't go find 30 better trades that are cleaner technical setups than Google right now?
Well, and that's why we have the process, right? I mean, when we get down to it and we've got 25 picks, we're going to evaluate all of them against each other. You don't want to just go out and pick anything and say, hey, we're going to run with it. You have to stick to your step-by-step process that you develop as a trader. You know,
give me Visa on the breakout. Give me American Express on that clean retracement.
All good problems.
Give me Cisco on the breakout. Give me Apple on the retracement. All of those are better technical setups, in my opinion, than Google.
All good problems to have. There's a lot of, and it's a stock pickers market, Matt. You and I were talking before the show that the sectors have really split. We're going to get into sector analysis here just in a minute and talk about that, because you have good bull picks, you got good bear picks, and you've got a lot of things that are now changing and moving, which is what, as a trader, you absolutely want that out there in the marketplace. RTY real quick, Matt. Let's move on to small caps, talk about that. Then you go ahead and take your point while you're doing the analysis as well here.
Well, I was just going to say, within the sectors, and we're going to look at those sectors a little bit here in just one moment, because we've talked in the last month and a half, Tim, about how these sectors have started to really beat to their own drum. And it just starts. It doesn't happen overnight, right? It's not day trade. It's not even a swing trade. These things are position type situations where you have money coming in and money coming out, and they take time to kind of separate themselves from the price movement and the volatility of the snapback rally that we saw in January and early February, coming out of the one-day bear market on December 24th of last year. So we're seeing right now a lot of decoupling from these sectors, that some are starting to stand out. Some of them are starting to show weakness. And we're seeing that from the indexes as well. You're seeing a really strong NASDAQ right now. You're seeing a lukewarm bullish S&P. You're seeing a flat out neutral Dow Jones. But when I'm looking at the Russell 2000 right here, Tim, I have to give this on the left of center. Right. I'd have to.
I could understand a 50-yard line argument, but it's not bullish. Let's start there.
Where would you put it? If you had, we don't rank the
RUD. I would probably say a -45. I see the pivot points. I see the moving averages. I see the long-term risk. I see the concern, but you're also non-earnings season. We're in March. We're now heading into earnings season. Q2 earnings are supposed to be better than Q1 earnings. We've had a good start to the year for stocks in general. I couldn't give it a real aggressive bearish call. I see the risk. I'm with you, because you're below the 20 and the 50 with a lower pivot low, lower pivot high scenario.
You're 3 days away from a death cross scenario, Tim.
Yeah.
Okay. And it's not a major one. It's when the 20-day moving average crosses down over a rising 50-day moving average. The weekly death cross is far more important than the daily death cross. I'll be the first to admit that. But what I'm seeing here is lower pivot lows, Tim. I'm seeing lower pivot lows, lower pivot highs. You break this down into a 1 hour chart, resistance, resistance, resistance. And so I don't like what I'm seeing on the Russell 2000 in comparison to those other indexes, and I would be perfectly comfortable with issuing bear calls on it right now.
Yeah,
I would put it -40. I would have -40 is where I'd have it.
All that big debate and argument, you and I are 5 yards apart. I like it.
Well, there wasn't a debate on the RUD. There's a debate on Google. There's no debate on the RUD. We're in line there.
There's a lot of small cap stocks grabbing my attention here today, Matt. BlackBerry, for the first time in a long time, we're going to be talking about BlackBerry. Now, does anybody out there in our halftime crew still rock a BlackBerry, by the way? I haven't seen one in years. They had a real BB, actually, not BERY, BB.
Although that's a pretty good setup right there.
Very Global is actually not a bad setup. Better chart.
The reason I brought up Berry is when you said BlackBerry, this was the stock I prepped. It had to be last Saturday when I was teaching in Denver. And so when you said BlackBerry, it's like, oh yeah, I remember Berry was a really good technical setup, and it's okay. I liked it a lot better a week ago off this pullback, kind of consolidating here. But BB, no, Tim, I have not seen a BlackBerry in Lord knows how long. I honestly did not know they were still. Do they still make phones?
Yeah, I think they make a lot of different products though as well, and they're also moving into software and all kinds.
Doesn't matter. Look at that movement on the earnings report. My goodness, that is a beautiful movement. If you took we could make fun of BlackBerry all morning. For the rest of the halftime show, we can make fun of BlackBerry, right? Technically, that is clean. And if you close above 10, you got to be bullish in some capacity. Now, this is not a stock I trade, definitely not a stock I invest in, but if you're looking at it, you got to love what you're looking at.
Yeah, and a lot of the earnings growth, Matt, was in services and software, so not necessarily phone sales. Maybe this company is evolving into something that I'd have to dig into it and do some research, but they're up 9% on strong earnings. Always going to grab my eye. Another company that grabbed my eye today was Yeti, and it's down 7%. I love this stock. I love this brand. I need a pullback on this thing if you're looking for a trading setup, Matt. Down 7%, they'll remind you of the volatility of small companies like this. Watch list for sure, right?
Yeah, definitely. But it's also a stock that's went from 12 to 34 in 4 months. So, don't freak out over a 7% drop. I'm not in it. Don't trade it. It's on my watch list, and I will trade it in 2019. I won't trade it until I see cleaner technical setups, though.
I'll tell you this. I got a marketing email from Yeti, the company. They just released a new product they never released. It's a camping chair mat, $300.
I'm in. I'm in. I go camping a lot. I'm in.
$300 on a camping chair. I
I
know
don't know.
most people would say that's crazy, but Yeti makes such a good product. I have to go sit in this chair.
Wait. Camping chairs over the camping fire, very important. Okay, very important. Right, that's number one. And when I say I'm going to get one, I'm going to get one. I'm not going to sit in it. My wife will sit in it. I'm going to sit on the wood stump of a tree that I always sit on. Right.
Mm-hmm.
I like sitting on a rock or some wood or something like that. We're camping around the wilderness, but my wife will get one. We're going to support Yeti's revenue coming into the summer.
Stock that I've not traded before, but in the small
real
cap
quick,
range.
Tim, real quick. Frank just got us some info. Yeti caught in a downgrade from Morgan Stanley. That's what's really kind of driving the price. And I understand a downgrade here. I mean, you are talking about a stock that's done a lot, but yeah. We'll wait for a little cleaner setup.
Take a look at SMAR. Now, this is not a stock that I've seen before or traded before. $5 billion market cap. Beautiful looking chart, Matt. Relative volume is high today. Whenever I'm doing my scanning on the weekend, especially as I go through the different market caps and institutions and all that, I'm looking for companies to potentially watch list. $5 billion company trades 1 million shares a day and on a nice little retracement. Does that grab any interest to you?
Yeah, it does. But if I was a new trader, I would stay away 100%.
Yeah.
I like the technical setup here. I like the slowing down at $40. But Tim, that is a lot of volume on the bearish, type mindset coming in over the last week and a half on this stock. After it dinged up here at 49.04, bring it back down 20%, down to the 40% in a week and a half. That's not for the faint of heart. If you are new to trading, this is not a stock that you should watch, listen, trade. Trade Apple, trade Visa, trade American Express, trade high volume liquid stocks. I like this. The professionals like this. I'm sure the hedge funds like this. But for new traders, I would stay away from it from a new trader perspective, just simply because of the volatility. But I do like it. I do like the technical setup. I love this support level right here at 39.25, Tim. You got old resistance. You got new support. The only question for the advanced trader is, where do they trigger? Really, that's the only question. Because this is a good technical setup. I just think it's a very volatile technical setup. In looking at it, when you're looking at trying to analyze where that trigger is, pull up that 30-minute chart and find that intraday retracement resistance level that you feel comfortable getting in above. And for me, you see this on Friday, Monday, Tuesday, Wednesday. For me, you got a pretty clean trigger above 42.40 on that intraday chart. I would not trigger above the day's high. I would not trigger above yesterday's high, but I would trigger above the weekly high that you're seeing here at about 42.20 would be the trigger above that.
Yeah. Last stock I want to talk about before we go into currencies, commodities, and then the sectors. We're going to do a quick sector breakdown here as we head into the weekend, Matt. Lyft, the IPO. It's a company that's not exactly making a lot of money, definitely by definition a growth company, IPOing now. We know how the new IPO markets are fascinating. We're going to have Pinterest and
if you're
Uber
buying
also.
IPO, you're making a mistake.
They're at the higher end of this range here. I think there's a lot of takeaways I have. What's your takeaway, first off?
First of all, Team Tackle does not trade IPOs. That's number one.
Mm-hmm.
Number two, this was the biggest IPO since the last god-awful IPO, and still a shitty stock in Snapchat. And I said it on Snapchat, I said it on Facebook, I said it on Baba, and I'll say it on Lyft. If you're going to trade this company, wait for the market to settle down, right? Wait for the market to settle down. And that's going to take months. It's not going to take days. It's not going to take weeks. It's going to take months. Wait for trends to develop, number one. What I have been seeing in IPOs, and the IPO market should come back a little bit this year. We should see a little bit more high volume type IPOs coming yet. But to me, you're buying the cheaper version of Uber is what you're trying to do. Why don't you just wait for Uber? It's to me, you're buying that cheaper version, less demographic, less people, less revenue, less of everything on Lyft in comparison to Uber. So when they come out with the valuation of what was it, 24 to 26 billion dollars, and it was like on the high end of whatever they expected it to be, and no, the market's gonna be like, are you kidding me, guys? We will lock in profit here because it's overvalued coming into the IPO. So IPOs, to me, you gotta wait, and especially on those IPOs that are consumer driven, that everybody knows. Right? Everybody knows a Facebook. Everybody knows a Baba. Everybody knows a Snapchat. Everybody knows a Lyft. And because everybody knows a Lyft, it's the consumers that are going to come in and be like, oh, I want to buy Lyft. I want to buy Lyft. Well, the professionals are going to be like, I will be more than happy to sell you my shares of Lyft, or even, short Lyft on the downside. So to me, it's just a stay away. I think it's radical behavior to buy here, and I could be completely wrong. Traders are. But to me, this IPO is a stay away until you see some clear trends develop on Lyft. And right now, the only trend I see is on a 15-minute chart here. And from the ding of today, it's been down.
I'm going to give you some numbers that are going to make you want to go on a soapbox rant, and I'm going to enjoy it. I'll give you that opportunity here in just a minute, Matt. Here's revenue and earnings the last few years. Okay, 2.2 billion last year, up from 1.1 billion in 17 and 343 million in 16. Now that's the revenue. They actually had steeper losses. Last year, they lost $911 million against the $2.2 billion in revenue. So they spent more money. They're obviously trying to say
debt-driven company
infrastructure. It's a debt-driven company that hasn't shown profitability, pricing at $20 billion and strong demand for the IPO. I know that's selling right there. And believe me, you 100% are right. We don't trade IPOs on Team Tackle. I mean, that's not really what we do. We avoid them. We've talked about that many, many times. This IPO was only going to price at 72, Matt. So that 88 price tag was a huge jump against that 72.
We've seen that time and again with these consumer-driven IPOs, though. We've seen time and again that the IPO comes get priced by the financial companies, and all of a sudden consumer demand comes in higher than what we thought it was. Money from the sidelines. I don't see this as the professionals coming in right now, Tim. When did the professionals come in? The professionals came in when the bank offered them shares 6 months ago.
Sure.
That's when the professionals came in. It's not a fair and equitable route when we're buying an IPO versus when the hedge funds bought the IPO, or
not a fair game.
Or the venture capitalists bought the IPO. The venture capitalists have been investing in Lyft and Uber for 5, 6, 7, 8 years now. So it's not a fair game, and because of that, you got to wait for trends to develop. And with that revenue stream and with that the loss, obviously companies are in debt, and companies use debt, and companies go public so that they can get people's money to further their business structure. But you got to eat into Uber. And
I think there could be a debate.
Uber's the Apple of the service industry.
I agree with that. I understand, but I think you could debate that. I mean, I use both services, by the way. And recently I've been using more Lyft because Uber's technology doesn't always
Call me an elitist, but I like the cars in Uber far more than I like the vehicles Lyft uses.
I'm just saying there could be a debate depending on the city, depending on your experience. I know a lot of people, drivers too.
I know them too.
They're loyal to Lyft.
We've traveled a lot. They like dealing with Lyft more than they like dealing with corporate Uber. I get that.
Delta Sky Miles. Lyft has a program
that's not true. You know what it is? Lyft has much looser regulations for their drivers and the cleanliness of their vehicles than Uber does.
Yeah. Hey, I think they're both great companies in the fact that they're providing a service to me, but not great companies from a fundamental perspective.
I would absolutely not call Lyft a great company. I would call Uber potentially a great company. But neither one of these companies have shown a profit in any capacity in the last 5 years.
No, damn right. Scary. I mean, if you look at the actual revenue and earnings numbers and the losses they have to price at $20 billion, we'll revisit this one, I'm sure, over time as the price action develops. Move on to the dollar, and it's specifically at some point the pound dollar cross pair, Matt. Third vote on Brexit and no go. What's going on over there in the UK?
Yeah, I had the pleasure of debating this extensively over the last few days, and I don't think anybody knows what's going on. I don't think Theresa May knows. I don't think anybody actually knows what is going to happen with Brexit.
Mm-hmm.
And because of that, the pound has been and will continue to be on the no-fly zone for hashtag Team Tackle until it doesn't.
I think so. I mean, I have a firm belief that fiat currencies are all really a bunch of trash right now, the way that we've created so much money over the last 12 years in these new programs. But we could debate that another time. USD is showing some strength on this news here today.
Can I just say one thing to Ilka?
Mm-hmm.
Because I'm sure we have people in Team Tackle who drive for Lyft and drive for Uber.
Mm-hmm.
Don't invest in companies simply because you drive for them. That goes against value investing principles. It creates a bias that sometimes you can't overcome because you see the positive, you don't see all the negatives.
Mm-hmm.
That's all I'll say to that.
Yeah. And back to the currency discussion, Matt, I'm not sure what to do with the dollar here from a ranking perspective. The pound dollar cross pair, I can say, stay away from it, but the euro is not great right now. The dollar's shown me a little bit more resiliency. It's now back up at the high point in the neutral consolidation range. If you don't have a breakout, you can't really call it bullish. Although I do like the longer term fundamentals of the dollar against these other currencies. It's a tough call for me. I don't know where I'm going to rank this one, quite frankly. I got to really process it.
I've enjoyed shorting the euro, and I'm sure certain Cody has enjoyed shorting the euro over the last few days there, Cody.
Yeah.
But Cody said something to me today. He's like, well, I pulled it off, pulled off the trade. And to me, until you see a breakout, you're really just day trading, quick swing trading here. And until the dollar breaks out, there's not going to be a lot of good trades on the dollar this week unless we get a breakout. Okay.
Mm-hmm.
So you get a breakout on the dollar index, 97.70. You're currently at 96.26. That's actually a pretty big movement for a currency to break out of. And even if it does break out, Tim, I probably would hesitate here because you're overextended coming into that breakout. The most likely path for the dollar over the next week is either a retracement or consolidation between 97 and 97.70. So if you're looking at this from a Euro/USD perspective, you're seeing and you're seeing that kind of that inverted trend and channel, right? But if you're looking at this coming back down into that support level about 112 by 111.75, I would have to see this level broken, couple that with the dollar breaking out in 97.70. And I just don't think it's going to happen this week. I just really don't. I think you're going to see more consolidation, maybe a retracement, but this dollar has not broken out for a while. It just hasn't. And I just don't see the issue coming at us fundamentally, economically, geopolitically, that would drive the dollar crazy one way or the other in the next week. I think you're going to get a cleaner technical setup on the dollar next week versus this week.
Yeah. And, the thing about it is we've got Coach Keith coming back for the Forex report this weekend. It's always going to be good to hear his voice. I know we've been rotating in and out with that one, but I want to hear his take on it as well in our SRP meeting here today, Matt, after the bell. It's always fascinating. Let's move on to crude oil, then gold, talking about some of these commodities. Dollar rallying and crude holding up has actually been very impressive. They have an inverse relationship at times, but crude's still sitting right around that 60 mark and overall trending in the same direction. I don't know if it's strengthened at all. It's not like we've broken run or anything like that, but the crude light chart and the prices, they're interesting to me. What's your take on the chart here, Matt?
You buying the breakout?
Not this Friday. No, not into a weekend.
No, not into a weekend.
No.
High base. This is what the crude has been doing. High base, wait for the breakout. High base, resistance at 58, breaks out at 58, runs to 60. High base between 58 and 60, breaks out at 60, runs to 62. That's kind of the trend. That's kind of the pattern you're looking at here on crude oil. So wait for it to close above that level, and definitely not coming into the weekend, but coming into Sunday, Monday, when the futures market opens up Sunday night, you get a clean break on that. Yeah, I think you could target that at 62, but nothing more.
Mm-hmm.
Oh, it teased us this morning. I even posted on Twitter right as it was above. I'm like, look at that breakout, and now it's already back down.
I see.
That's why you wait for the close.
I think we're just going to make a rule of thumb that something can't confirm on a Friday.
Oh, yeah, I agree with that.
Might be there. We might be there right now.
By this time in the day on a Friday, when you have no more news and you still are pretty light across the market in terms of volume and whatnot, you're not going to start chasing breakouts. There's no doubt about it. Give me gold if you would, though, before you go to the economic calendar real quick.
Yep.
That Is this a head and shoulders pattern developing here, Matt?
Yes.
Yeah, you got reversal characteristics all over the board. I mean, 1280 support, if we break below that 1280 support, that would be ugly technically. Dollar rallying, gold is down.
Yeah. I don't see it breaking this week. Same reason I don't see the dollar breaking, but left shoulder, take gold out of the equation. Take the symbol out of the equation. Left shoulder, head, right shoulder, 20-day, crossing over a 50-day neckline. So it's kind of like, you remember that flag pattern we were talking about when you're like, I don't like trading on that breakdown on the flag? That's tradable underneath that flag pattern. But the better signal is underneath 1280. Obviously, I never, ever short gold. That's not in my trading plan, right? It's just not. But I would be a little concerned about my long-term gold ownership, either in the paper or the physical, if we break 1280. You might want to look to protect if it does break 1280.
Sure. Last thing I want you to do real quick here today, Matt, the XLs in all the sectors. You know, we promised our team out there, Team Tackle. And by the way, welcome out. If you guys are excited for the Justice Boys to be back, just push in Team Tackle in the chat, 100%. Matt, I don't know what to do with all these different sectors. I've got some rated very strong, some that I've moved into bearish territory as well. Very subtly for me, we have a split going on in the market. If you look at the performance, you look at the charts, there are some changes going on here. Give me a quick run through if you would.
Well, and what I'm going to do is I'm going to rapid fire the sectors, but I'm going to do in a sense of reading the technical analysis on the trends, pattern, support, resistance, but I'm going to rank them. So I am doing my prep work for ranking the sectors for the Scouting Report meeting here in just a little bit. And I'm going to break down the aggressive sectors versus the defensive sectors as well as I do that. So your aggressive sectors, everybody write this down, aggressive sectors. XLB, that's basic materials. XLE is energy. XLC is the communication sector. XLI is the industrial sector. XLK is the technology sector. XLY is the discretionary sector. You have XLF. I've never thought XLF should be a defensive, but it is categorized as a defensive. XLP is consumer staples. XLU is utilities, and XLV is healthcare. Now, every one of us have our different perspectives with how we go ahead and rank these sectors from a scoreboard perspective. And as many of you know, hashtag Team Tackle, you guys are very familiar with our scoreboards. We rank them from basically touchdown to touchdown. On left of center is bearish, right of center is bullish. 0 to 20 is kind of in that bullish bearish, bullish positive 2. 20 to 40 is slightly bullish. In the end zone is kind of that, yeah, let's just, start borrowing money and buying IPOs with it, which will never happen. So we really kind of live between the positive 2 and negative 2 type mindset on those scoreboards. And if you ever do see us put something in a touchdown, that should tell you what we think of what is going on. So looking at basic materials sector here, I have a neutral rating on the basic materials sector. It really is just a matter of where you want to put it. You have overhead resistance double topping at 56. You have support double topping at 54. You're currently at 55. I mean, where else would you put this besides literally the 50-yard marker from a short-term perspective? I could understand somebody saying, well, I like the intermediate uptrend. We're still holding above support support pivots at 54. I certainly understand somebody putting it on the 40-yard marker. I would not understand somebody ranking this in a bullish or a bearish environment right now. It would have to be just your personal opinion on that 40 to 40 neutrality level. I'm going to give it right there at the 50-yard marker, simply because you're in the middle of the range between overhead resistance and under support at 54 by 56. The communication sector, I do have a slightly bullish bias on the communication sector, but it is very, very, very weak in my opinion. It's shown me a little bit of a overhead weakness up here. You'd like to see that communication show a little bit more strength on the backs of Facebook and Google and whatnot, but we're not seeing it. You are above your breakout channels here at about 46.59, 46.60. You still have a rising 20-day moving average, but there's a lot of failed pivots here and a big failed breakout there, Tim. That failed breakout on a big wide body candle is a little surprising. We should have saw price appreciation. Did not occur, came back down. I'm going to give this on the 40-yard marker, which is it's neutral, but it's expecting something. And so I do expect a little bit more bullish behavior coming into next week than I do bearish behavior. So I'm going to give it right there on that 40-yard marker, but that is not exactly a screaming endorsement for the communication sector. When we're looking at the energy sector, I do have it on the right side of 50 simply because we have increasing support channels still, and you're still above the 20-day moving average. Oil might break out, might run with it as well. I don't have it aggressively bullish, though. I got it ranked a little bit right of basic materials. I'm going to rank this right at the 45-yard marker, slightly above basic materials, but I don't love the price action. It's a lot of neutrality, little bit of upward movement in price from a support level perspective. Next one here is the industrial sector. I'm concerned about the industrial sector, but I'm not that concerned about it that if we do trigger above 75.25, that to me is tradable, Tim. If you get back above those levels, I do like the overhead trend. I still see this as a bullish sector. I just don't see it as an aggressively bullish sector. I'm giving XLI on the slightly bullish positive perspective at the 35-yard marker. It says simply because I like the support holding right here and do like confirmation above that 75.25 level. Technology here, I love tech. I love the trend in tech. A little bit of slowing momentum, but not necessarily anything to get too concerned about. A little bit of consolidation in the last week. We talked about that on the NASDAQ. I do like a trigger above that 74, confirmation above that 74 level. If we get confirmation in the NASDAQ, if we get confirmation in the technology sector, you should see some really, really good trades on those technology stocks. I have this ranked at the 20-yard marker. Personally, I could understand somebody going 30 and I could understand somebody going 15 here. I personally have it ranked right at the 20-yard marker. It is my highest ranked sector going into the week. That doesn't mean it's the best sector. It's just the highest ranked for me going into the week. And I'll get into consumer staples here in just one second. And then the last aggressive one I want to talk about is discretionary. And I like the potential breakout of discretionary here, Tim. Love the potential breakout of 114. Yeah, I do have a bullish rating on it. I don't have it ranked as high as technology, but it's really splitting it for me. I have it ranked on the 25. I would understand somebody ranking this at 10. I would understand somebody ranking this at 30. I have it ranked at the 25. I'm a little cautious in the market right now from a bullish perspective, but I do love that potential breakout of 114 on the discretionary sector. Financial should be aggressive. For some reason, it's not. I have this ranked at the negative 25-yard marker. I hate what I'm seeing in the banking stocks. I don't like what I see in the technical conditions of the financial sector itself. I have a negative 25, slightly bearish rating on the financial sector. And if we do get confirmation, I'm looking to hit that pretty aggressively next week. Looking at the next one here, consumer staples. I love what I'm seeing in consumer staples right here, Tim. To me, it's just a little overextended for me. That's it. That's the only issue here. I have it ranked at the 30-yard marker right now simply because it's overextended and I expect it to consolidate or retrace, but I love what I'm seeing in the staple sector right now. And so for me, it would be like a 15-yard marker if we were 3 days and we were consolidating for the last 3 days, but we're a little overextended coming into perhaps a very important resistance zone right around 56 to 56.5. So it's a little overextended. I'm coming off the ranking a little bit. I have it ranked at the 30-yard marker, but I do love the trend that I'm seeing in that sector. Looking at the utility sector, it was the best one for me here. It slowed down at 59. Now you're showing a little, that is obviously slowing momentum. I still have a bullish rating on it. I have it right at the 30-yard marker and still think there is a spot in everybody's portfolio for utility stocks, especially given the overhead concerns of the slowing global growth environment. Looking at the healthcare stocks. Healthcare to me has to be left of center, Tim. You have decreasing resistance levels, you have increasing support levels. That is forming a little bit of a symmetrical triangle formation. But when I look at the individual components of the healthcare sector, I'm not in love with what I'm seeing in the healthcare sector. So I would understand anywhere between 40 and 40. To me, I'm left of center. I'm at the negative 45-yard marker on the healthcare sector, and then the real estate sector, full of very safe haven real estate REITs and other REITs out there. I have the real estate sector ranked very similar to what I have in the utility sector, a little overextended, a little better pattern than the utility sector. So I have it ranked at the 25-yard marker, Tim. That's my breakdown on the sectors.
You know, I love it. Yeah, especially healthcare. I think that healthcare has such an interesting split between the healthcare plan companies and the drug manufacturers. When you're looking at the overall sector, a slightly bearish call is probably the right one. United Health and those other ones, very fascinating. Great job on that, Matt. A couple of stocks I want to take a peek at. Frank says Tractor Supply here. There's breakout Frank. Being true to
that's
himself.
why I don't believe he liked to express more than Visa. I do like that break, though, on Tractor Supply. That's a clean break. We definitely are going to debate that one in the scanner report.
So based on the sectors and the split, Matt, you had a few of them on the negative side of 50. Where do you got the SPY?
Overhead, the SPY, let's go back to the ES contract here. Where I have the SPY, I have the SPY at the 25-yard markers.
25. Very good. Guys, we're back, and we'll be back next week as well. We'll be here Monday, same time, same station. Cody, the only thing really to kind of promote, obviously, we've got our scouting reports over the weekend, the pro membership. If you're Team Tackle, you know all about that product and things that we put out every weekend. But we've got the Women in Trading Mastermind group here tonight. Cody, if you can grab that link and drop it in the chat one more time. One last pitch for WIT, Matt. It's always exciting. I'm very proud of the growth of that whole thing, but one last pitch. What time is the webinar, and what can they expect?
Webinar's tonight at 8:30 p.m. Eastern Standard Time by 6:30 Mountain Standard Time, and I have no clue what to expect. What Rosemary and the Women in Trading do with Emily, they run that show. It's literally, we just want to throw our support behind it because it's such an amazing mindset. It's such an amazing idea, and I absolutely love what they're doing. So, let's go ahead and support our team. And that's what Women in Trading are. They're part of our team. Let's go support them. Let's show up and let's have some fun. Now, I don't know if I'll be there because this is my first day back and I'm probably going to go do something with the family. But I just absolutely love what Emily and Rosemary and the Women in Trading are doing.
Mm-hmm.
I love what Casey just said in the chat.
Thank you, Cody. Cody's loving all the praise he's been getting while the Justice Boys have been gone, Matt. He's got this huge smile. I love it. Cody, great job. Listen, man, the fact that you could step in, and you gotta have the mic at some point, Matt, to find a voice in this world. And as a coach, Cody, you've been developing great over the last year. I'm very proud of you, and I do trust you to handle the halftime report when we're gone. So great job on that.
I was talking about the race part, but thank you for the compliment.
Yeah. All right. All right, we're out, guys. Good job today. We'll see you back here on Monday.
Later, everybody.